All right, thanks everyone for joining us, and thank you for the panelists. I guess we'll kick off, and I'll introduce myself and then the panelists before we dive in. My name is Aaron Graham, the senior analyst at AGP, covering consumer and cannabis. Just get started for some compliance disclosures. I do cover all three of these public companies. I have not been compensated, nor has my bank for the past 12 months. So with that, we'll go ahead and get started. So first, with an introduction, briefly, Michael, you want to start us off?
Hi, first I want to thank Patrick and Elliot for bringing us all together at this great event. It's very important for all of us to do this on a regular basis. So first and foremost, appreciate the guys. Michael Salaman, co-founder, president of GrowGeneration. We basically design and build and outfit the largest commercial cultivation facilities in the United States. We've been at it since 2014. A few years ago, we made a conscious decision to basically consolidate our storefront hydro supply chain into a distribution and direct to cultivator supply chain, focusing on proprietary products. Today we basically operate one of the largest commercial cultivation product platforms in the United States. We're focused on recurring revenue, margin, and EBITDA, which is really how we're measured as a public company. We got on the NASDAQ exchange right at the end of 2019. We raised, tremendous amount of capital. We've been good stewards of the capital. We're holding about $50 million of cash and about $40 million of inventory, which gives us flexibility to do a bunch of things. And we'll get into that as we get into the discussion. I think from a political perspective, the policy that I think ultimately will happen, with the rescheduling, it's really a catalyst to unlock EBITDA and margin if we take advantage of it. And that's what we look forward to. And I do believe that will happen, eventually. GrowGen's focus is really on a few things: lowering the cost for the operators, providing consistency, and delivering really a product-delivered ecosystem that is reliable. And that's what we continue to do. And we service, the biggest, and we're continuing to execute on that plan. Thank you.
Thanks, Michael. Christine?
Thanks, Aaron. Thanks, just as you said, to Patrick and Elliot for putting this event together. We're happy to be here again. And I am Christine Hersey. I'm the Vice President of Investor Relations at Trulieve Cannabis. We are one of the largest cannabis multi-state operators in the U.S. With 232 stores and over 4 million square feet in production capacity. We are based in Florida. And we've been very active and out front on pushing regulatory reform, including rescheduling, and also working towards adult use in our home state of Florida.
Thank you, Christine. And Aaron?
Yeah, Aaron Miles, Chief Investment Officer of Verano. We are also a multi-state Tier 1 operator. We operate in 13 states, have 15 production and cultivation facilities encompassing about 1.1 million square feet of total square footage, and we have 158 dispensaries. And yeah, I'll echo a lot what everyone said is, just thanks to Ignite It and the crew for having us here today.
Yes, absolutely. Really appreciate the Ignite It team putting this on. So for this panel, I know a lot of conversation today has been about debt, but we have three public companies. We're going to try and take, an equity point of view, even if equity prices have been depressed across the space. So let's start from the beginning, right? How investors can get a hold of the stock. It's been one of the bigger issues in terms of plumbing and being able to buy cannabis operators in the U.S., particularly those that are plant touching. So I want to just kind of start from the beginning with that. As a U.S. plant touching company, what are some things that you can do to make it easier for investors to hold and own the stock despite not being on major exchanges? Aaron, I want to kick it off to you because I know Verano has made some moves in terms of moving to different exchanges and more recently re-domiciling the company. So I'd love to hear in terms of some of the things you're doing at Verano to help make it easier for investors to own the stock.
If you're an investor and want to invest, just do it. So, But it's that simple. We're done. No, no. I would say, listen. I think all of us had a similar mindset of going public and using your stock as currency, and I think it really helped a lot of us expand our footprint to the point that we're at now. Now, the delays in getting into U.S. capital markets, I think, has dragged on, maybe a little longer than some of us initially anticipated. But what we've done as a company is try to look at what that landscape's gonna look like for us, if and when we'll say, reclassification happens and inclusion into capital markets happens. And so moves we've made, we're moving from the CSE to the CBOE Canada, which was a senior exchange, and it aligns us with the listing standards of the NYSE and the NASDAQ. So what we're trying to do is make sure that we have a seamless transition into the U.S. without any hiccups or any types of delays, when that opportunity arises, because we've been waiting for that moment for so long. We just announced that we're re-domesticated. It's official, from BC into Nevada. So that aligns our reporting structure with our operational structure, but it also starts to open the doors, I think, for the capital markets a little wider for us. You look at a company like Shopify, they're a Canadian-based company. They trade in the U.S., but they're having trouble getting onto the Russell 2000 because of being a foreign company, so they're having to petition and do these things. So as a management team, we really put our heads together to say, okay, what is this world going to look like if and when uplisting is allowed and dollars can start coming in, and we want to make sure that we're not going to miss any opportunities. So, fill out a piece of paperwork when you can if it helps kind of push that venture forward. But for us, we just want to make sure that we're always aligned for what those opportunities are going to look like going forward.
Appreciate that. And we've seen you go to CBOE. We've seen some other MSOs move over to TSX. Christine, I'd love to hear your perspective in terms of for Trulieve, how you view, their current exchange and listing in an environment to where we're not able to be uplisted as to major U.S. exchanges.
Yeah, thanks for the question. We are traded on the Canadian Securities Exchange. We've been there since 2018. We also trade over the counter in the U.S. We've looked at some of the other opportunities, whether it's moving to the TSX or migrating to CBOE. One of the things that we did pretty early on was become an S1 registrant, and then we've since matured to an S3 registration. So based on our conversations with NASDAQ, if uplisting were permissible, we would have a relatively smooth path to that. Coming back to where we are today, one of the things that we try and do is give our investors or potential investors some information about how to buy our stock. I can tell you, I still get emails, I can't buy your stock in my fill in the bulge bracket bank, account or IRA. I still get those emails all the time. And so we send kind of a pre-made form letter introducing them to some of the online brokerage places where they can get an account and buy our stock if they want to, because it's still a barrier for a lot of people. And I would say, just giving people that information, a lot of people are actually patients of ours or customers of ours, and they decide that they want to invest. So for them, it's more than just an investment. They feel like they're participating in our industry in a way, in addition to being consumers of the product.
Okay, great. And Michael, you can take a different perspective, maybe even tell the future a bit for the plant touching companies. You were originally on the OTC. You're an ancillary company. You don't touch it. So you uplisted to the NASDAQ in late 2019. Can you talk about maybe some of the benefits you realized uplisting to the NASDAQ in terms of the cap table, getting institutional investors involved, and how that differed moving from the OTC to the NASDAQ?
Yeah, I think it starts with performance. I think we started the company in 2014 and performed year over year as a private company, always wanting to be public. And as we got ourselves to a position right around 2019, we were doing about $200 million in business, making money, we thought it was the right time. And as a non-plant touching ancillary business, we were able to get our company sponsored and get listed through an S1 registration and ultimately take the company public, which was probably the highlight of my business career, ringing the bell and, having our name in lights in Times Square was a special day and night for us. And I think what the benefit is capital. I mean, we raised well over $200 million institutionally once we got onto the NASDAQ. The cost of capital and our ability to, utilize the capital to acquire companies, we have the flexibility because we have the balance sheet, to go out into the market if we so desire to do that. So I think the main benefit is, transparency into the capital markets. I think credibility, being a NASDAQ-listed company, is very important. The access to capital we have, if we wanted to go out and raise another, 50, 100 million, we have the ability to do it. But we need a purpose. We certainly would raise money, to acquire a business that made sense. But I think those are the areas that I think make NASDAQ, an exciting. And I do believe that the industry ultimately will be on the NASDAQ, and we will see the Canadian companies ultimately migrate into NASDAQ once rescheduling and all the regulatory events happen, because that's where the liquidity is, that's where the value is, and that's where we can all reap the benefits, of being on, the national exchanges, which is where we all belong. So, hopefully that happens sooner than later. But those are the real benefits that I see, being on the NASDAQ exchange.
Yeah, and I just want to chime in real quick, too. I mean, this is really key to touch on here. I mean, plant touching versus non-plant touching. There's nothing that precludes us from being uplisted. There's nothing in the bylaws. They're choosing not to be based on the legality of the business. And so when he talks about access to capital, and you think about what those national exchanges can do for you, the firepower that a NASDAQ brings, the protections that you have around your stock, having a market maker really protect, people trying to flow in and out of the markets, we just don't have that in Canada. And when we can all write a check, on a daily basis to cover the notional value of what our stock's traded in a day, versus when you see what US-based companies are actually trading at from a notional value, those dollars that could potentially flood into this market is massive. And so for us, we have to play the retail game right now, and it's tough. So when Christine talks about having to answer an email to say, you can buy our stock this way, it's just the world we have to operate in. But the hope is that when we do uplist and we do get into those markets, like where we're at in Canada versus where we could potentially be in the US, it's night and day difference.
And Michael brought up, potential rescheduling, being a catalyst. So off the Aaron, how do you feel about rescheduling as a catalyst, not only for your business from a fundamental perspective, but also potentially changing where you're able to be listed as a public company?
Yeah, I mean, again, it's game changing. I've worked at, we were talking about this in the green room, I worked at a different company that, had a $50 billion market cap, and an institutional investor came in and established a 10% position in that company. I mean, that's $5 billion from one fund investing in a company. And I'm not saying that's the type of dollars that could, come in immediately, but we're also not being marketed. Like, people don't know who we are on SIBO. The NASDAQ and the NYSE, they have these marketing departments that, it's the firepower that's behind marketing is just massive. So when you think about reclassification, it now makes you a viable business, right? We don't even need to talk about just being a normal business, taking credit cards, being able to advertise, being able to market, being able to earn interest on the $83 million that we have in the bank right now. What we're going to be able to do is really start to be able to use our stock as currency. And I think, again, we've touched on this in multiple conferences talking about consolidation and assets starting to come together. But I think that makes it more viable because we have too many waves right now. We'll get an inflow of capital and the market will be great for 2 days and then it trades down for 2 days. So I think the consistency that we would feel being in the U.S. capital markets now makes us a viable business, and I think we can start to go about things a little differently.
Christine, any additional commentary from you in terms of rescheduling, potential impact in terms of fundamentals and ability to list?
Yeah, I think, rescheduling would really be a very important first step. So if you think about it, this would be the first reform in over 50 years, right, for our business. So, and this would be a signal from the federal government that acknowledges the medical value of the plant and acknowledges that we actually do play a role, right? And so this would be a very, very important step. Obviously, the credit profile of every plant-touching operator would improve overnight, right? It's the equivalent of putting a glamour filter on our financials because we would be, taxed at pre-tax income and not at gross profit level, which is a meaningful difference, and there would be clarity around that, right? And so just a willingness for institutional, funds to take a look at our sector, to spend the time to do the homework. If you think about it, every state that we operate in, it's the equivalent of analyzing a different country. So for somebody who's trying to follow a certain number of stocks or names, it's a low return on effort, right? And if the notional value of what trades every day is 1/10 of what the threshold needs to be for them to make an investment, it just doesn't pencil out in terms of time and energy to invest in these stocks. So rescheduling is definitely an important first step. I think safer banking would help too, just because it would, again, acknowledge the value of what we're trying to do with these state market programs, right, and what we're trying to do as companies. And it would definitely send a signal and set the tone for that. I don't necessarily think that any one act on its own is going to unleash a wave of capital. I feel like the progress is likely going to be incremental, as it has been over the last few years with state by state opening up. But definitely there's a long way to go.
And I think just a quick point here too, when she talks about the liquidity, that's another big thing that precludes people from wanting to come in, is if they establish this massive position, what's your exit point? So, I mean, liquidity and trading volume and notional volume trading on a day, that's going to make a big difference. So I think there are people who potentially want to step into this space, but they're scared to because they don't want to get stuck.
Yeah, something that those listening on the NASDAQ, we can even see it with some of the Canadian LPs. Michael, maybe not a direct benefit to you in terms of listing via rescheduling or safer banking, but what are some benefits, GrowGen might realize indirectly, from federal reform occurring?
I think it comes back to, the policy change really unlocks, and is a catalyst for the MSOs and the, plant touching companies to drive, EBITDA and drive margin and to provide more capital into the market. And from GrowGen's perspective, that's a positive. As we, outfit and support, our customers, their financial stability and their ability to expand and grow, and certainly utilize, the benefit of rescheduling and certainly provide more capital into the market, benefits GrowGen. As an outfitter, a designer, and a builder of these facilities, the more capital that's in the market, benefits our company. We also support with our own capital. We're putting our money to work to assist in building out facilities, and also to be a good partner to our over 2,000 customers, giving them credit so that they can operate in a true business-to-business form. So, from our point of view, it provides just a better financial, climate and environment for all of us to grow together.
No, absolutely. That's a good next point I want to get to in terms of growth. Obviously, a lot of focus right now on cannabis operators has been on cash flow, but in a scenario of us switching back, to an equity, based investing environment, it switches back to growth, in my opinion. At the underlying consumer, you're still seeing a lot of growth. You're seeing shifts away from alcohol and tobacco into cannabis. I think a lot of data is pretty strong on that, but you're not quite seeing it in terms of some of the larger pubcos on the top line from sales. Part of that, I believe, is due to price compression. A lot of conversation today, but still the strong unit growth. So I'd love to hear more about how you look to inform investors about the strong growth opportunities that are still available for cannabis, even if some of the optics might not display it. Christina, I'd love for you to kick us off there.
Sure. I think there are three ways really that we can grow. And this industry has had a lot of growth, but it's been a lot of non-linear growth, right? So some years we have fantastic double-digit growth. Some years it's, we're fighting to stay in the same spot that we were the year before. And so it's not a straight line, as much as we would love it to be. But I think the three main ways are going to be, one, within our existing footprints, we can gain market share. So while we may not be seeing top line growth, we are seeing unit growth and we are seeing traffic growth. But as there's an opportunity for consolidation, we might have market share growth. Two is going to be catalysts within our footprint. So if Pennsylvania converts to adult use or if Florida converts to adult use, we're going to have step function growth overnight, which we've experienced in other markets. And then the third one is just going to be inorganic opportunities, right? M&A. So I'm guessing, but I think we're probably in the third inning of a wave of consolidation in the industry, and there's probably a long way to go for some of these assets to really, trade hands and get into a spot where they can operate long term. So I think those are probably the three main ways for growth.
Okay, great. And to close out, Aaron, why don't you talk about some of the growth opportunities and how you can display that to investors for Verano?
Sure. I think growth can be a very subjective word in this space. You see like a New Jersey turn on, and there was 13 adult use dispensaries, and how many tens of millions of dollars were those operators running out of their stores? So we get year-over-year comp questions where people don't think you're growing, but in reality, you're just seeing markets normalize. So I think what we're all doing is we're becoming better operators. We're understanding that price compression is a part of the cycle. We've had enough states convert to adult use to understand what that looks like. And this is such a cliche, but you control the controllables. So growth is going to come from us, grabbing market share in certain states, positioning ahead of adult use, as Christine mentioned, in Florida, VA, and PA. I mean, we have 102 dispensaries in those states alone, and we quantified a Florida at $300 to $450 million on the top line. If adult use turns on, I can't even imagine what it would look like for a Trulieve. And so when you look at growth, I think consolidation is going to happen. I think there's going to be natural growth from consolidation in the markets. I think, we've seen certain news of other products being more tightly regulated now. I think that's going to push product into the legal channels, which is a big opportunity for us. And in states that, start to flip to adult use, I think we're going to position ourselves ahead of those. And then you start to look at, what does an international look like? What do new product forms look like? If Schedule 3, or we'll say when, hopefully, Schedule 3 happens, what adjacent industries start to look at this space? Because, we're probably not always going to be a dispensary, grow the product, sell through a dispensary model. 10, 15, 20 years from now, what does this look like? And so I think when you can get uplisted, when you can start to operate like a normal business, you can start having those real conversations of not just surviving in the cannabis space, but how do you grow this business and take it to the next level? And so that's what we're all focused on, but we patiently wait.
Fantastic. Still a lot of growth opportunities ahead for everybody on stage here. Aaron, Christine, Michael, thank you so much for joining. Patrick, Elliot, and the whole Ignite team, thanks for having us here.
Thank you.
All right, so next up we have From Spirits to Strategy, featuring Craig Fox, Fred Musali, Norman Birnbaum, and